Gold, or XAUUSD, has fascinated traders for centuries, not just as a precious metal but as a global safe haven. Its price isn't tied to any single company, but to worldwide economic forces and market sentiment. Technical analysis lets us read gold's price chart to spot patterns and trends, helping us anticipate future moves. For July 2025, we'll focus on three key technical tools: Fibonacci retracement, exponential moving averages, and the stochastic oscillator. Each tool offers a unique lens. Fibonacci highlights reversal zones, EMAs confirm trend strength, and the stochastic oscillator reveals momentum shifts. By combining these, we can build a robust strategy for July, grounded in June's price action. We'll examine recent highs, lows, and momentum to create a logical forecast framework. This guide is for traders with basic market knowledge, aiming to sharpen their analytical skills. The goal isn't to predict with certainty, but to identify high-probability scenarios and manage risk. Let's dive into the technicals and map out what July could hold for gold. The journey starts with a look back at June's market behavior. June 2025 saw XAUUSD consolidate after a strong rally, peaking near $2,450 before gradually pulling back. Support formed around $2,410, but repeated bounces grew weaker, signaling fading buying interest. By the third week, gold broke below $2,410, accelerating down to a new low near $2,380. The month ended with gold hovering above this low, reflecting indecision and contained volatility. This range, $2,450 high to $2,380 low, sets the stage for our technical analysis. The market closed near support with sellers in control but buyers not yet out of the picture. July's direction hinges on whether $2,380 holds or breaks. Let's use our indicators to map the next move. The Fibonacci retracement tool helps us spot likely support and resistance zones. Applying it to June's swing high, $2,450, and low, $2,380, key levels emerge: 38.2% at $2,407, 50% at $2,415, and 61.8% at $2,423. If gold rallies, these are the resistance points to watch. A failure at $2,407 could mean another test of $2,380. A break above $2,423 suggests a retest of the highs. If $2,380 breaks, Fibonacci extensions point to $2,352 as the next downside target. These levels provide a clear map for July's trading. Next, let's check the trend with moving averages. Exponential moving averages, EMAs, reveal trend direction and strength. At June's close, gold traded below both the 20 EMA and 50 EMA, classic bearish signals. The 20 EMA had crossed below the 50 EMA, confirming a shift to a bearish trend. As long as price stays under these EMAs, the path of least resistance is down. For a bullish reversal, gold must reclaim the 20 EMA, around $2,405, $2,410, and then the 50 EMA, near $2,420, $2,425. Both EMAs are sloping down, reinforcing the bearish outlook. If price consolidates, watch for the EMAs to flatten, an early sign of a possible trend change. Now let's time our entries and exits with momentum. The stochastic oscillator measures momentum and signals overbought or oversold conditions. At June's end, gold's stochastic reading was below 20, deep in oversold territory. This warns that downward momentum may be overextended, raising the risk of a bounce. A bullish crossover below 20 could signal a short-term recovery. The dominant trend remains bearish, but oversold conditions near $2,380 support suggest a possible relief rally. Any rally faces resistance at $2,407 and $2,415, aligning with the EMAs. A break below $2,380 targets $2,352. A bounce could retest $2,415, $2,425. Manage risk, wait for confirmation, and be ready for either scenario.